Next up, from super cool to super, super cool, we have Emily Paxhia from Poseidon moderating a panel titled What's Next After a Series B? We have three amazing panelists, Karson Humiston, CEO of Vangst, Luke Anderson, co-founder of Cann, and Scott Kenyon, CEO of Wurk. Wow, this is going to be interesting.
Hello, everyone. Thank you for joining this very exciting session about venture investing. Very exciting to hear from these founders. What a great interview was that. Can we hear it for Representative Mace and my very good friend Tahira? It's not every day you get to see like one of your besties interviewing a congresswoman. It's pretty cool here. So anyway, thank you all for coming. This panel is about, so you've raised your Series B, now what next? We've talked a lot about what goes on in the public markets, but the private markets of cannabis are what's coming next. So let's hear from the founders today. We'll start to my left if you'll share your name, your company, and what you do in the industry.
Hey, everybody. So great to be here this morning. I was thinking this morning, like, how cool is this? We're at a cannabis psychedelics conference in Miami Beach. Like, doesn't get much better than this. So I'm so happy and excited to be here today. My name is Karson Humiston. I'm the founder and CEO of Vangst. We are the cannabis industry's hiring platform. So we help people find full-time and temporary jobs all through our platform. We've raised a couple rounds of financing and very excited to be here today and talk about it all.
Good afternoon. Happy 420. Who's excited it's 420? I'm disappointed I didn't fit into my old Miami Vice suit because Karson bet me that I wouldn't wear it, but didn't squeeze into it. But my name is Scott Kenyon. I'm the CEO of Wurk. We're the largest payroll and HCM provider for cannabis. And I see a lot of familiar faces out there, so welcome.
Hello, I'm Luke Anderson. I'm one of the co-founders of Cann. It's a microdose THC beverage, and you either love it or you really hate it, depending on your tolerance for THC and price sensitivity. We really position ourselves as the bridge to the future consumer who's not yet shopping at dispensaries but is getting tired of alcohol, and I'm just really excited to be here.
All right, this is great too. We have founders from very different aspects of the industry. So well, I want to kick it off. Let's dig in on the rounds of financing that you've completed. Can you speak a little bit to the different structures of each round, the different kind of size? You don't have to say exactly how much, but if you can share a little bit about the sizing of the rounds and how you've thought about them differently, that would be great. Scott, you want to kick us off?
Yeah, I think we started with a seed round with friends and family and built that all the way up. Our last round was a AA round and brought in our existing investors along with other new investors into the family. Each round, the thing I would say it's unique for us, or as you're going through rounds, is you have to have your own goals of not just the money you want to raise, but who do you want to bring into the process and who's going to really help you along the way. Because it's not always easy to find money, but it's really hard to find good investors. And no matter which round it is, that's a key part and key focus area for me as a CEO.
Absolutely. Luke, what about you?
So we have raised somewhere in the vicinity of 40 million over 4 rounds of funding. Started with Preseed, a lot of friends and family. At the time, I thought it was really important to take small checks from my business school friends because it would help me get out of bed and navigate the journey. I really regret doing that. I think you want to be careful to take money from people who not only will be helpful, but are actively helping you to build the business, promote the brand, and bring in new capital. Early on, I think it's easy to pull in an early angel, but once you close your first $1 million check, you realize that takes 2 or 3 times as long. Your first $10 million check, that for me was a 2.5-year journey of getting to know somebody, dating them, learning about each other's interpersonal dynamics and what we see for the industry and ourselves personally. So we just closed up a 27 million Series A. So I don't think I can actually talk about what's after Series B, but yeah, it's a mix of friends and family, institutions, both cannabis and non-cannabis. We've attracted some lifestyle investors on the VC side. Imaginary and Global Founders Capital have been super helpful to expand the reach beyond just cannabis.
Absolutely. I want to circle back on the types of investors in a minute, but let's hear from Karson.
Yeah, so I had a little bit of a different path when I started Vangst. I had no idea what venture capital was, shockingly. So for the first 2.5 years, we were completely bootstrapped. And then we decided that we really wanted to scale out our technology product and build up our leadership team and have a larger budget to focus on sales and expansion. And so we raised a seed round. The seed round was led by a non-cannabis firm, Lear Hippo. Then after that, we raised a Series A, which was led by Casa Verde Capital, Snoop Dogg's fund. We thought Snoop was coming today, but he couldn't make it. And then we most recently closed our Series B, which was led by Level 1 Fund, non-cannabis fund. And we feel really lucky to have both cannabis and technology investors. And I think that's been part of our secret sauce, is having a wide range of investors and VCs on the cap table to provide all different perspectives. I think that's really, really important. This industry is really unique, and there's a lot of things about this space that other industries don't have. And so being able to have VCs that know and live and breathe in this industry every single day, but also being able to have investors who have seen growth stage technology companies has been great. And, we had our board meeting yesterday, and having the mix of cannabis folks and technology folks, I think it's been really awesome. And I would definitely encourage other people to try to have a mix of VCs.
Absolutely. And we talk a lot about this as investors ourselves. When folks reach out to us, we try to help them to seek alignment in the investors that they're looking for. So you were talking, Karson, about cannabis, non-cannabis. I'd like to drill in a little bit further about the ways that you look at investors and think about we talk a lot about being value add, because venture capitalists can get a bad rap, as we've heard the phrase vulture capitalists, but we try to think about being constructive funding partners. And so I would love to hear from the founder's point of view, how you think about this and how you think about building relationships, what you maybe have witnessed that didn't work well, and what you could share with people who are looking to raise money, or even investors in terms of reflecting on how they are of service to their portfolio companies. Anyone want to start?
Sure, I'm happy to kick it off again. I think everybody is different, and what's going to work best for you as a founder is what you should look for in partners. And so for me, I like to have a personal relationship with our partners, similar to how I do with our team members. And so I know our investors very well, and we've focused on finding people that we align with values-wise, as well as align with around business goals. And so it is really a marriage. I think that's one thing that people don't realize before they raise money, is that once you raise money, you're going to be spending a lot of time with your partners as you build the business through ups and downs. Our business was impacted when COVID happened because a lot of people weren't hiring. And so the hard days are the days that you want to be able to pick up the phone and call your partners and say, man, people aren't hiring right now. Let's come together and figure out a plan. And so having partners that are there by your side through the good days and the bad days, I think is super, super important, because everything isn't perfect in business, it turns out, despite what the headlines say. And so really finding partners that are going to be there by your side and continue working towards achieving the mission that you're looking to achieve. And so I think it's a personal decision, and you really have to ask yourself, what am I looking for out of capital partners? And go out and find those people. They're out there. It might take a lot of phone calls and a lot of meetings, but great partners are out there. And I would definitely encourage founders to not settle when it comes to investors, because you're going to be working together for a really long time. And there's great investors out there. You just have to find them.
Yeah, and I'm glad you raised the thing about reaching out right away, because that's something we talk with our companies because the way things work in business is when it starts to go wrong, it tends to accelerate. And so it's the way we feel about it is like, reach out, let's be transparent, and work together to try to solve for those issues, because otherwise it just snowballs and it just goes from there. But Luke, what about you? Because you mentioned this a bit.
I couldn't agree more. I think it's your mutual problem solving ability that determines the success. And between seed and Series A, I was on the phone with Logan at Imaginary every single day. Monthly revenue and cost numbers. What are we going to do to solve the problem? Disaster scenario. Holy shit moment. And he was right there with me. And because we had such trust and transparency every month for 2 straight years, it made the ability for us to solve problems that got hairy way, way easier over time. And a lot of people think, well, I don't want to share this with the investor. Like, let's only share so much. Let's keep it at a regular interval. Total opposite story for me. And I'm really glad that I went with every little thing that went wrong. I shot a text message, a GIF about how I was feeling about it, and then we just figured it out.
Is it GIF? I've been calling it GIF.
Yeah. Let's don't jump into that.
What do you
One
think,
thing to
Scott?
add there is when you're pitching and you're raising money, people will naturally, there's a certain group of people that will just listen to everything you say, right? You'll connect with a certain type. And what I try to do when I'm raising money is to make the best, use a sports analogy, the best basketball team, right? I can't have 5 point guards or 5 shooting guards. I need to have a diverse group of folks that can help me in different areas. If everybody's only going to be able to help me in one area and I have problems, as Luke said, in 3 or 4 different areas, who am I going to call, right? So I think bringing that diversity of skill set and diversity overall is a huge thing when you're looking at bringing your investor base.
I think that's a great point. And, one of the things that folks call us about, or portfolio companies, is, there's a lot of ways to fail in business, but one of the surefire ways to do it is that you run out of money. And you want to be able to get ahead of that, especially when things like if we slam into a global pandemic, or maybe there's a geopolitical event that's totally chicken winging your entire supply chain, whatever it may be. You want to get ahead of it in terms of making sure you have the runway to get through it. And this was something I remember we had calls about in the beginning of in 2020 March with our companies. But so when you're thinking about in our industry, just further to that, capital has been an ebb and a flow. It has not been a commodity the way we've seen it in other industries. We've had to work a lot harder to raise money no matter what, and you've all successfully done it. So what have you learned from the ebbs and flows of the capital into cannabis, and how you've navigated that to make sure that you do have the runway to keep building your businesses?
I mean, one of Brian Spaley, who is one of our early investors, told me, no matter what you think about the dilution, if someone that you want to work with is offering you more capital, take it. And I think that that's really important when you think about the unpredictable nature of this industry. We've been really glad to have diluted ourselves more and taken more money from a trusted partner that became more invested in showing up, because it helped us ride out some of those really difficult troughs. And, we're in one right now. I think, it's A, take more money, and B, just make sure that it's with somebody that you want to deepen a relationship with and be flexible.
I would say also, I would add on to that, I've been in many different industries and flown close to the sun a few times in those companies. And at a point where you say, well, I think I have enough capital, but there is a big investor that's ready to come on there, you never have enough capital. And to the point of dilution, it's because when you do need it, that person might not be there. So when it's there, it's I've been burned of saying no and coming back 6 months, 12 months later, and they say no to you.
That's right. Yeah, because investors do change their moods occasionally.
Quickly.
Yeah. Karson, thoughts on this?
No, I agree with everything that was said. Nothing to add.
Yeah. So, I mean, for us, it's definitely a discussion about dilution. We always try to help founders to understand what it looks like, too. So we do a lot of pro forma cap table work so folks can understand the trajectory that they're on. And, it's a percentage of zero is still zero. So I think you're thinking about it all the right ways. And so to that end, one of the things that we've seen since I'm based in San Francisco, I know a lot of traditional VCs. I've seen some of the things that have happened in the Valley over the past years and have seen some of these growth at all costs, and then how it can catch up as you're getting ready to IPO if you're not paying attention to really your core business metrics. How do you guys think about when to really put the pedal down on growth and when to kind of pull it back and think about reserving your capital? What are your thoughts on that as you're planning, as your fundraising rounds come up?
Yeah. So how the approach that we've always taken is like when you find something that's really working and it's proven that it's working, doubling down. And so we have, I can give a live example is we recently rolled out a new sales structure. And so we spent a couple months seeing how the new sales structure is working. It's working. The unit economics are working really well. Let's pour fuel on the fire and go for it. And so I think like it's really making sure that where you're gonna allocate your capital is gonna get you the return that you're looking for. And so I think a mistake that I've seen some of other even companies that we work with is really trying to grow before they had all their ducks in a row. And so I would say, I'm not sure if this completely answers the question, but making sure before you invest a ton of money that you know what the outcome is going to be and test a little bit, slow down to speed up.
That makes a lot of sense to me. And when you were going through that process, was it a dialogue with your advisors, your board of directors, or just within you and your CFO and the company?
We definitely shared our plan and our growth plan with our board and our advisors. And we also, I would say another thing that we didn't touch on here is, in addition to VCs, something that's been really helpful for us is finding really awesome advisors. And so we're in the HR tech space. And so finding advisors that are best in class in whatever department they come from at an HR tech company. So whether it's, we have an advisor from marketing at ZipRecruiter, we have somebody from Indeed, Trusted Health, some of the best HR tech products, and that's been super useful as well. We actually had one of our advisors yesterday Zoom in to our board meeting, and so like we spoke to our advisors about our decision. We speak to our advisors about our decisions, our investors. I think knowing what you don't know is like super important. As a first-time founder, there's a lot of things out there that I don't know, and I'm the first to call our investors or our advisors and ask them for their advice, and there's no shame in that. I mean, it would be a lot worse to like not know and not think you know and then make a big mistake. So definitely say lean on them.
Yeah. And Luke, you're in a category that's one of the fastest growing categories. It's one of the newest cannabis consumption categories. And it's frankly so exciting because I think it's novel and it's very approachable to a lot of folks who haven't always felt welcomed by cannabis because of the form factors that were unfamiliar, potentially even stigmatized. But so you're finding yourself in this massive growth trajectory of beverage. What are your thoughts about managing, leaning into growth and kind of making sure you're reserving resources?
I mean, it's growing, but it's growing off a really small base. And so the growth is sort of overstated. And it's also not cheap. Like, to your last question, valuation, it really is investor confidence. And with federal legalization just being somewhere out there, that's a big nebulous variable. Your ability to pick good revenue versus bad revenue is the most important piece of this. Last couple of years, we had to fight for legitimacy. There was a lot of bad revenue in what we had to do. But, now that we are legitimate enough and big enough that people know the brand, we can say this is a good time to only focus on good revenue, because the people that want our product, they're not typically shopping at dispensaries. So trying to fight for somebody that maybe needs a higher dosage product, is it worth it in the end? I don't know, maybe we wait.
Would you mind, I think what you're saying is so right on, because not all revenue is created equal. Would you mind sharing a little bit about the metrics you look at to define good versus bad revenue?
I mean, how expensive is it to get the revenue, right? Like, if it's digital ROAS, I know in cannabis it's really tricky, but you can actually think about how much human capital and digital ad spend, programmatic versus, other, and then say, okay, to get this number in this one channel, like, was it worth it? And really, I think people were settling for something that was like $1 in, $1 out before. We're moving toward a world where the people that survive are the ones that can put $1 in, get 2, 3, 4, 5 out.
There you go.
I think the other thing I'd add on there is what was bad revenue 6 months ago, a year ago, could be great revenue in the coming year.
Tell me more about that.
And we had a segment that we walked away from, and really because it was the cost of that revenue. Right, and is profitability? Can you balance that out with your other revenue channels? That's all part of the plan. But it's okay to stop doing one thing for a bit of time and then coming back in there when you're ready, or your organization, and it still might not be a great margin producing vertical, but it's much less of a hit a year later than it would have been when you were trying to do it.
And do you feel like the sophistication you now have around the way you review the quality of these metrics in your business and the revenue profiles of your business, is this something that you've learned more recently, or did you have these ideas going in on your earlier rounds of fundraising?
I think it's definitely more recently.
Yeah. Same.
And that's having that plan, right? You have to have that plan and go to it. Doesn't mean you don't swerve off the plan, but you have to know where north is. And it doesn't matter. You asked earlier, is it team members? Is it the advisors? Is it the investors? It's yes.
Absolutely.
All of them.
And so thinking about revenue profile further, cannabis is a consumer product, right? That we have long been kind of living in a silo, but now we're seeing it starting to be integrated more into society. I'm personally very excited about this. What are your thoughts about continuing to focus just on cannabis revenue or thinking about non-endemic revenue streams? Is this something, and as an investor, I always try to walk the fine line of like focus guys, but don't miss the opportunity, and gals. Shame on me. Inclusive language. Guys and gals and everybody, what is your focus in terms of, seeking further reach on that? Yeah.
So we launched a non-cannabis version of our product, not a CBD drink, but a drink that has no CBD, no THC. Yeah. And we did a huge experiment where we were like, let's pump this through direct to consumer and see if it's a good awareness for the brand tool. Very expensive, bad revenue. So we formed a relationship with Southern Wine and Spirits, who's going to distribute it in Bevmo. It looks curiously like our cannabis product, and that's good revenue because there's this unquantifiable benefit of it being on the shelf in the channel that we want the customer, or the customer that we want is shopping today. And so that's like the kind of decision tree that you need to do is like, is there other things that are making this good for us? And if so, yes. We're pursuing a media revenue stream for the first time because so many people are asking us with our talent partnerships and our ability to create content, can you help us or can we integrate with you? And I'm like, hey, if the brand is aligned, if we have similar target consumers, let's go. And then at a certain point when regulations relax a little bit, then it goes back to focus because focus is the only way that you get to the exit. But you may need to have some contingencies as long as they're aligned with your overall strategy in the near term.
It's interesting too when you're thinking about brands that it's revenue, but it's also creating a flywheel of kind of brand continuity and awareness. So that seems like good revenue. Go ahead. What about you, Scott?
Well, for me, I think before you go explore non-cannabis and an ancillary business like ours, you have to have the fundamentals down. And so that was real important for us as a company Wurk. For the last year, we've really worked on driving the fundamentals to drive an unbelievable customer experience. Once you have that, then you can go out there. My CRO is out there. Raise your hand, Evan. He's always asking, what more can he sell? He'd sell this microphone to us again if we were coming back up. So,
yeah, he did.
And I need him to push the organization to do that. And we have to be out there and looking at that. And one of the things I talked to my product team about is, hey, it's okay to have strikeouts, but let's go look for those home runs. You're not going to hit a home run if you're not willing to strike out. So don't be scared of striking out.
Interesting. I do wish I could clone Evan and put him at every company in this industry. What about you, Karson?
Yeah, I think a major question that comes up as you get further and further along in fundraising rounds is total addressable market. And so it will certainly come up. I know for us, we just closed our Series B. It will definitely come up in the Series C. And so the question is, do you go deeper in cannabis and offer more things, or do you take your core product and go into additional industry? So it's definitely there's pros and cons to looking at both ways. But from our perspective, I think we have great traction with our current customers. So what else can we offer them to help them make better hires? What else is in the HR tech realm? Likely the direction that we're going in. But I don't know that there's a right or wrong answer. I think it's very dependent on your business, whether you go deeper with your current customers or you expand and you go into new industries.
Yep, absolutely. And so, as we were talking about earlier, a lot of these strategic decisions are made in partnership with some of your advisors. And certainly when it comes to budgeting with the board of directors and preparing to execute on that plan, I would love to hear from each of you a bit about how you think about governance in your businesses, how you think about board construction. What have you learned that works well, and anything you can impart on that?
For me, it's just, again, having a plan. Like for our board, I have a very good board structure right now. I have regular meetings with my board members. But to me, it's me out in front of customers, understanding what customers want. To your point of how are they evolving? So we can get in front of them. Either if we can't provide it, who can provide it for them, and be that value, become that partner. But just as importantly, spending time with the frontline people. Right? I have one-on-ones with everybody in our company once a year, and I also meet with every new employee after month one. And the thing I tell that every new employee, doesn't matter if it's a C-level or a frontline employee, is don't put on the Wurk rose-colored glasses as long as you can. I want you to be super critical of every part of our business so we can get better. And that's a difficult thing to do no matter which company you're working for.
Absolutely. And when you said you had a good board structure, do you mind sharing a little bit, like composition in terms of independents, investors, series,
I
common
think
shareholders?
It's one of those things I could tell you a lot about bad boards I've been involved with. I think right now my board is super communicative with each other and with us and with me specifically. But I also think that's because we're that way with them.
Yeah.
And so it's a two-way street. We do have one independent board member, and that is very important for smaller companies like ours because they bring in a different view than our VC backers and other board members.
Yeah. Karson, what do you think about board composition and some of these governance pieces?
Yeah, similar to a lot of the other things I've mentioned, it grows as your company grows. And so when we raised our seed round, our seed investors came onto the board, but it was, me and our investors really just more or less doing like a catch up. Then we raised our Series A, and it really wasn't until this last round that we now have our Casa Verde, our lead from our Series A, and Level 1, our lead from our Series B on the board, and we've started to bring advisors to the board meeting, likely going to do a search for an independent director. So I think it grows as your business grows and you continue to scale it up. I think it's pretty standard for the lead from the round to have a board seat. And so, I think we've done what most VC-backed companies do for our structure, and then figuring out how to make the most use of the time and bringing the people into the room that can really help with strategy and driving the business forward from an operational perspective as well as a VC perspective. So that's something that's been really fun for me to continue to get to build out and grow the board. And it's top of mind because we had our meeting yesterday and we really felt like it was our best board meeting ever. And it's not like the board meetings 2 years ago weren't good. It's just the business has grown and therefore the board has grown. So I think just continuing to level up the board the same way that you would level up the team is what my advice would be. And really just doing what's standard. I mean, we've tried to work with attorneys that do a lot of VC deals. I know all of our investors work with attorneys that do a lot of VC deals, and we're doing what's standard and not try to create any weird, I've heard about all these like crazy weird structures and like, let's just keep it simple and try to do what's best for everybody.
Yeah, definitely. Luke, what are your thoughts on this?
With board appointments, it's all about diversity, and it's not just gender, race. It's like what are the capabilities that they bring to the table. I would argue, even though I thought like, oh, let's just assemble a board. We made a startup. Let's get 5 people around a table and meet every quarter. Just make it you and your co-founder for as long as possible, so that you can make sure you are figuring it out without all the noise. And then I think there are kind of 3 waves of board members that you add. The first ones you add to be relevant, they stamp of approval. This is a legitimate business. That's very helpful. Somebody who's exited a company before, somebody who's managing a cannabis business that's larger than yours. That Ben Kovler from GTI is on our board has been tremendous. The next wave is like who can add fuel to the fire and help you grow. And then the next wave after that is who can help you grow in the right ways. Just like good revenue, bad revenue, there's good strategy, bad strategy. We added Rosario Dawson to our board, which is a very non-traditional appointment, but she is super politically engaged. I saw her take on Hillary Clinton about healthcare in a speech, and I was like, I want this person fighting for cannabis justice reform with her platform. And, I can only count less than 5 women of color on cannabis boards. What's the deal with that? And so having people who are aligned with the intention that you set in building your business and that have different flanks of where they play, critical.
Yeah, and so we're investing earlier again in one of our strategies, and I do hear it's the first time that these founders, to your point, are finally adding a non-founder person essentially to the board. Any words of advice you would give founders? Because I do hear trepidation and concern, and I mean, even just the other day, Jack Dorsey was like, it's all because of the board is dysfunctional at Twitter. I'm like, well, there's a few other things going on, but I think any advice you would have for founders who are looking or are thinking about this, or do you find it to be productive at this point to have the boards that you have in terms of the feedback you get?
Do I find the board to be like helpful?
Yeah, like anything you can say to a leader.
Yeah, look, I as a founder, if you didn't have a board and you were worried about having a board, I think it's been very helpful. And I honestly think just the exercise of going through preparing for the board meeting is, even if you don't have a board, you could just like create a mini one with yourself and some friends or something, because I think the exercise of going through, getting the materials together, looking at all the metrics, and presenting is like really, really good, because when you're in the weeds every single day, it's nonstop, and a year could go by without looking at some key metrics. And so when you know that after every quarter, we have a board meeting where we review everything and we talk about what's coming next, that's just really good practice to get into. And from my perspective, since we were bootstrapped for the first 2.5 years, obviously there was, it's like Carson's LLC basically, and we didn't have a board. And I would go months without looking at some of these metrics. I mean, thank God they were going in the right direction. But once I started every single quarter having legitimate meeting where we're reporting on metrics, we're talking about strategy, it's really, really helpful for founders, and I would encourage everybody to do it.
I love that. The sense of accountability and self-reflection is huge. Anything else you guys would add on that?
I'd say there's no reason to fear a board at all. And like anything else, the more time and effort you put into it, the more reward or backfill you're going to get from them. So
that's great feedback. Okay, so let's say you're now going out for a round. I heard you tell tales of kind of the early days were a bit of, angels and maybe high net worths, and then you kind of moved up and got to bigger investors. Will you help us to understand a little bit about identifying a lead investor, the role of a lead investor, and how you felt like that was the group or the person to help set the terms of a round and carry it through?
Sure, I'm happy to start. And so for people that might not know in the audience, so you go out and you are pitching a bunch of different investors, and somebody says that they want to be the lead of your round. And so they write a term sheet, and in the term sheet, they're really setting the terms of the rest of the deal. And so they're saying, this is what the valuation is going to be. Here's how much we're going to put in. Here's what the board composition is going to look like. If founder shares are going to vest, here's how long the shares are going to vest, right? A lot of different things. And so they're doing this work. And then you sign the term sheet and you have your lead, and then you go out and you fill the rest of the round, and the rest of the round follows in along the terms that the lead sets. And the lead's also doing a lot of the diligence, and everybody else, the rest of the investors coming in, piggyback to a certain extent on the lead. So the lead, and oftentimes the lead is going to be the one taking the board seat, the largest investor in the round. And so choosing the lead is really a really important first step in raising a round of financing. And it's important to find especially since they're likely going to be the one joining the board and one of the largest, if not the larger, if not the largest investor coming into that round. It's definitely the most important decision that you make in the fundraising process. And so I would say getting clear on what it is that we're looking for in a lead for this particular round. Is it my really big goals for the year are to build out our product. So I want to find investors that really understand product and technology and building best-in-class product and engineering teams. If that's the focus, then look for leads that really have that expertise. When we raised our seed round, Lira Hippo led our seed round, and they have an amazing track record of helping companies get from seed stage to Series A and in a lot of different industries. And so because of, I imagined it was going to be really a lot of things that happen between seed and Series A were going to be really hard. That was a really awesome lead to be able to have people around the table that have done this before. So drag that answer, but leads are super important. You want to pick a really solid one and figure out what exactly you're looking for.
Luke.
Carson's dead on about the importance. When you think about the marriage metaphor with investors, like the lead investor, that's the person you actually get married to, and everyone else is kind of a groomsman or whatever. And like a relationship, you sometimes have to do crazy things to secure the partnership. And I remember, once my advice to founders is don't be shy about your intentions, because if you really want to be with that person and they're kind of neither here nor there, you better find that out fast, because you're burning cash while you're waiting to get the check. So, I knew I wanted Imaginary. They were super aligned with our vision about it's microdose THC drinks, CBD drink. That's like something you buy when you can't have this in a state that, is legal. And the day before I was supposed to close the deal, it's actually a partner at Lair had sort of said, nah, it's about CBD drinks. It's not about THC drinks, to my prospective lead. And he called me the next day and was like, I think I'm getting cold feet. And what do you do when the person you want to get married to gets cold feet? You fly to wherever they are and you show up guns blazing or like bouquet in hand and you say, I'm not walking out of here until we have a fucking deal. And you know, for me, it's not like you can just bulldoze through securing a lead. That's a very bad look. But going to New York and meeting with Logan in person, somewhat unannounced, and saying, what do you need to believe in order to say yes? He says, I just don't believe you're going to get 3 million in revenue in your first year. I just don't see it. The channel is under evolved, makes no sense. Your product is like not what the person going to dispensary wants. And I said, look you dead in the eye. 12 months from now, you'll have exactly 3 million and I'll shake on it. And he's like, hey, if you're that, you know, sure, then let's go. I walk out, I'm like, well, how the hell am I going to do that? But we finished the year at 2.95. And it was just like every day working with him with that one goal in mind, it just made it a breeze. But you have to lay all the cards out on the table. Otherwise, you're playing a weird game.
And that's good too, is like digging in to understand what it is, how the investor is thinking about your business and how they're thinking about the growth of your business. So you can be able to answer to the things that will keep them up at night, because we do not sleep that much. Scott, anything else to add?
No,
to
I
that?
think they covered
Nailed it. Okay, so this is all laddering up to the potential exit, right? So why don't we talk about that? Like, as you've done the different rounds of financing, how are you thinking about doing this? We talked a little bit about dilution. We talked about timing. But how do you think about what you're laddering up to on the exit? I'm asking broadly because I think you all
What was the
probably have
last part of
different.
the question? Sorry.
The exit.
No, but
How do you think about how it's laddering up to the exit?
I think when you're leading up to that exit, there are key metrics that that every company is weak at. How do you make your ugly kid a little bit prettier, right? And really focus in on that, because as you go and you position the company to be in an exit, whether it's a private exit or a public exit, people are going to be looking at every different angle to say, well, this is probably why I don't want to invest in Vangst or Wurk or anybody else. And it is essential that you remove those obstacles, as many as you can.
That's right. What do you think about this, Karson?
I have like so many investors in the audience. I want to be careful. I was about to say I never think about an exit, so I should probably rephrase that. But seriously, like I think it's so important to focus on building a great business. And so we're super hyper focused right now on giving an amazing customer experience, launching new markets, building new products, and hyper focusing on building a great business. And you know, we're still relatively early stage, and so while of course the ultimate exit is in our minds and we're building strategic relationships and thinking about it in the back of our minds, it's definitely not front and center, and we're really focused on building a great business, hitting our annual targets, defining those targets for next year and hitting those. And I think if you build a great business, the right buyer will come knocking.
Yeah, and I think that's a great point about the timeline. I noticed in cannabis, because the rate at which the MSOs grew and then actually went public was so fast. And it was really because of the necessity of accessing the capital markets to continue to grow their businesses when Jeff Sessions rescinded the Cole memo and things got really hairy for a minute there. Oh wait, it's still hairy. But so I think about, we need to readjust our timeline thoughts on venture. It's really 7 to 10 years or even longer sometimes with products too. Is like you look for those escape velocity moments. But Luke, I'm curious to hear your thoughts on this.
I think it's just knowing the different ways things could shake out and being very cognizant of the likelihood and how it shifts over time. For us, it was like, is this a 2-year exit to a big cannabis company for sub 100 mil? Is this a 5 to 7 year exit to big alcohol for 3 to 500? Is this like we IPO in 10 years in a post-legalization environment where, you know, we can be the weed claw? Or is it like, let's run this business forever? And my co-founder Jake says it really well whenever we reevaluate. It's, well, if we're still having fun, we just keep going. So as long as you know the different potentials and how they shift based on regulations and other stuff, then you just adjust based on how much fun you're having.
I think that's right. And I think like that's the final way we always think about how you establish the right partnership in your investors is, are we all aligned on the timeline, on the path, on the potential ways that we see an exit or don't? And what does that look like? And so I think this has been incredibly helpful. I hope for people in the audience looking to raise money or investors looking to hear how founders think about building relationships and raising rounds of capital. And we're really almost perfectly on time here. So thank you so much for everything today. I hope you guys enjoyed the discussion.
Thanks, Emily.